Welcome, everybody. My name is Fausto Pugliese, and welcome to another episode of Cyber Traders. We have a new guest today. I'm really looking forward to hear what he has to say. We have Chris from the uh, trading, I'm sorry, from the
The
technical
technical
traders,
traders.
traders. Sorry about that. And look,
No
great for
problem.
being here. Looking forward to having you on. And so, how's things going? How's your trading going on this week?
Yeah, thanks for having me, Fausto. And yeah, trading's great. I mean, really, the market's kind of gone sideways, chopping around with Jackson Hole, a little bit of fear selling into that, and then the pop. So the market's just trying to digest all that right now. So it's just kind of sit and wait or hurry up and wait type of mode.
Yeah, you know what? That was let me tell you, what a crazy rally on Friday too. A lot of us did pretty well. No matter what you
Yeah,
bought, you did well on it. And we had the correction yesterday.
yeah.
And I'm really curious about how you look at technicals, everything like that, because we do have a lot of people that are very technical people here and want to know what you saw on that market. But before we do that, I want to get everybody know a little bit about you. Tell us a little about you. How did you get into trading? I know this whole story. You started when you were like, what, 16 years old or something like that, and then you kind of build on
Yeah.
top of that.
Yeah. So more or less in high school, I was 16. I was in finance class, and I'm up in Canada, and our province had like this stock market challenge for all finance classes in grade 11 or grade 12, whatever it was. And so we picked stocks. That was back when tickers were in the newspaper, and we just picked ones with the coolest names. And we didn't win, but we still turned like $100,000 into like $180,000 in a semester. And that was for me. I was like, well, that's what I want to do for a living. I mean, that was pretty easy. And I'm more of like an introvert, or I used to be. And so I was like, this is perfect. I just open the newspaper, I do my own thing, I call the broker. So like that's how I kind of got my teeth wet. And then shortly after that, I got this package in the mail, or my dad got this package in the mail from Larry Williams. And it was a marketing piece, a little booklet teaching you about futures. And it was the best written marketing piece. I have hunted high and low for that. It is incredible. But I was so convinced. I'm like, Dad, we need to trade futures. We can make like 50 grand a day or a couple days with pork bellies. And he laughed at me. He's like, no way. But anyways, from there, Larry Williams, I started following him, and I got into the markets. Kind of, he's the commodity kind of guy, and I got into trading. I started to do fundamental analysis. I used to buy stocks in high school. I opened an account. My dad co-signed because I was underage, and so I started trading stocks, buying the ones that had quarterly growth. I took a bunch of courses to identify the best companies, and I did buy them. And then the tech bubble came, and pretty much lost all my money a couple times over in different ways, which we'll get into probably later. But I realized fundamental doesn't work. I'm like, you can own the strongest companies, and they get cut in
Yep.
half, and then the price gets cut in half again. And that was when I flipped my strategy from buying companies that looked good on the books to I'm going to use technical analysis. John Murphy, the godfather of TA, more or less got into his stuff. And that's why ever since then I follow price. And that's what I focus on. I'm the technical trader. And so now I follow price, but I have gone through the gauntlet. I've traded stocks. I used to buy strong companies, sell covered calls back in the late 90s. And then I got into day trading and all that stuff, and I got into trading currencies and forex and futures trading. I've kind of done it all, and it's always been my mindset was to be a CEO of a company, and I'm like, I want to start at the ground floor, learn everything, and work my way up. And so that's what I've done in trading. I'm like, I'm going to try all styles and find out which one clicks with the way my brain works, how much time I want to dedicate, and what works for me. And so I just found my sweet spot over the past 25 plus years. And now I just kind of settled
You
in
know what's
there.
so funny? You just hit a nerve. I remember my class did the same thing, where that's how I fell in love with the stock market too. I remember my teacher was teaching us. What was it, social studies or something like that? I forgot what class it was. It was a finance class, and we were learning about the crash of 1929, and every day we bought a stock and buy a stock. So we started with like 50,000, and then every day we came in, we were up like X amount of money, and we took like 50,000, ended up being up almost like 400,000 and a million. And we're like, what do you want to do? You want to hold? I'm like, no, everyone's like, let's go in, let's go. And then the next day, like, we lost everything. And we didn't know. And she
Yeah.
played this trick on us. And like, now you met the crash. Now, what are you going to do? Or the crash was coming into effect. And it was a lesson. I was just like you said, I was so like amazed by the stock market. And I said, this is what I want to do. and just looks like you had the same kind of story and so on. But you know what's interesting? You said how you went from like futures to stocks and everything else. Like we train a lot of students at Cyber Trade University, and I know you do too. And how is it that you found your niche? Because everyone's like the problem I always find is everyone gets sold these things like, oh no, this is like less risk, high reward. You know, you don't need to risk a lot and do that. How did you find your style that worked best for you? Because I think a lot of listeners here that are students of mine, they tried something and then, you know, and they need to know when it doesn't work. You know what I mean? So how did you find that
Yeah.
you find what worked for you?
Yeah, I mean, really, it was like the school of hard knocks, right? You got to put in the time. You got to try all kinds of stuff. Everybody, you don't know how your personality and how you're just going to function with certain stuff. Certain things people just click with. Some people are options traders, right? Some people, like, everybody's got their unique style. I evolved over time. I mean, I started trading small cap
Mhm.
stocks and slowly evolved. And you know, as I kind of started to build up my wealth and my account size, I'm an entrepreneur, so I do a lot of other stuff. I have multiple businesses, I invent stuff. So eventually I got to the point where I'm like, I don't want to be glued to the screens. I have a larger account. I don't want to trade a lot of individual stocks and have all the headline news and company specific news. So I slowly evolved saying, I'm going to step back to slower moving charts, and I'm going to catch bigger waves that roll through the markets, and I'm going to find a way to best identify them and kind of go that way. So I've evolved from being very, very active to now I run an end of day strategy. So more or less, I wait to the end of the day to confirm any signals. Obviously, if there's targets or stops hit intraday, those get triggered. But really, I use the daily chart and follow along with the 30-minute intraday chart for some short-term sentiment signals. But I've just settled into ETF trading. That's my
Okay.
sweet spot because it has all the liquidity you need. You can move in as much money as you want in a blink of an eye, and you can still trade absolutely everything. You can trade the indices, sectors, commodities, currencies, like, you know, you name it, crypto. So the ETF market is not only easy to move money in and out with a large group of people or with your own capital, but it also just gives you the stability that you're not going to wake up with, you know, news or earnings and the stock's down 20%, right? And with day trading, obviously you close out at the end of the day, so you don't have to worry about that, which is one of the nice things I actually learned from you a long time ago. I don't know if you remember or not, but I think it was 2003. I took all three of your courses. I took beginner, intermediate, and advanced day trading. And I've carried that forward, and I still remember it clear as day. I know it's changed a lot in the tools that you use now, but I think one of the best ways, and I always have people ask me, they're like, how do you get good at trading? I'm like, well, either you follow a daily chart for years and get slow experience, or you read the intraday charts and see the patterns happen dozens of times a day and learn to control your emotions, right? And so like day trading is the ultimate way, I think, to speed up your learning, get chart time in. You got to get track time in if you're like a race car driver, right? And so like that was where I really got the charting down because you live and breathe it every day, picking stocks, closing positions. I think one of the biggest things is to accept taking losing trades. It's part of the game. Close out losers. When they backfire, just get out. I mean, it's risk and position management. You definitely learn very fast and even faster in day trading because everything just moves really fast and you're putting a lot of leverage on a quick
Yeah,
position,
no, it
right?
definitely does. You know, it's so funny, Chris, because I remember, you know, a long time ago you did take the class, and I always tell everybody, like my goal is, and just like you, we like to teach everyone because eventually you learn what you're doing, and you'll find your own niche, and then eventually you'll teach other people. You know, which is great. You
Yeah,
know, like
yeah,
listen, we all have mentors. Right, you know, you have the mentors, like you mentioned a bunch of people, including myself. You got to take these classes, and then you'll find what works best for you, for your style. You know, and that's
yeah,
and let me tell you, it's not like you're going to abandon it. I mean, you're just going to know, you want to learn the people who do it all day long and that are very well known in the industry. Like you mentioned McMillan, all those people. I mean, these are the godfathers of people who started this. And there you are.
yeah.
And look where you are now. You know what I mean? Now you're up in Canada, right? We're
I
out in
am. Yeah,
Canada,
just north of
in
Toronto.
Toronto. All right.
Yeah, north of Toronto, but
Okay.
close.
Because I'm
Yeah.
actually going to be there, you know, for the money show. I think I met you there not too long, like a few times.
Yeah, I see
Okay.
you there. I'll be presenting there as well. We both presented
Yeah.
there last year as
Yeah.
well.
Yeah. I remember.
I'll see you
I'll be
there.
doing a challenge there too. I'll be there on Friday. So yeah, we definitely got to meet up again and say hello like
Yeah,
last time.
sounds
But
good. Yeah.
regarding about, you know, being around for a while, how many years you've been doing it now then? How long's it been?
Tw 26 years that I've been, nose to the grindstone. That's pretty much
Okay.
what I do. Yeah.
So my point that I'm asking that is like a lot of people, like one of the biggest thing I teach people is, I don't like to teach people how to make money. I like to teach them how to stop losing it. That's the winners take care of
Yeah.
themselves. So for your
Totally.
26 years been around and doing it, how do you control losses? Like how do you be patient about
Yeah.
it? Because some people just don't, that's like the biggest hurdle people have. They just don't know when enough's enough and
Mhm.
just, listen, you just got to cut your losses because, marriage is great, but divorce can be very expensive, I tell them. So how do you handle it and how do you deal with it and to prepare for the next trade?
Yeah. I learned the hard way. So the last account that I blew up, this was like 15, 20 years ago, was a futures trading account. And I blew it up the same day I funded it. So the account I had before that was futures. I was day trading. I got into positions and I wasn't respecting risk. And the leverage with day trading futures, I kept averaging down. I'm like, this thing is going to bounce. It's going to bounce. It's kind of bounce. And then, of course, the closing bell came, the margin call came, and I pretty much lost everything. And then it took me a while. It took me like a month to refund the account, save up money, get back in there. And I went right back in with this like I'll make that money I lost back real fast. I'll just wait for a really good trade setup. And of course, I got in the same bloody scenario. Emotions take over, and you don't want to be a loser. You don't want to bite the bullet. And I lost that account in one day, and that was the one where I really hit rock bottom. I'm like, holy, like I don't know what I'm
Yeah.
doing. I need to like get a control of my emotions. So that was the one that really cut deep, and that one really hurt the psyche for a long time.
How long did you get
And
back
so now it's
recover from that?
Yeah, well, you have to accept your problems. Like you have to accept where you're missing out on stuff like discipline and controlling your emotions and accepting losses. And it's funny because now I have no problem taking loss. I can get into a trade and it might roll over a couple of days later and get out for a
Yeah.
small loss. And I don't I could care less because no trade is going to cripple
Right.
me anymore because I have very
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 well said.
stringent rules. I could take three or four losses back, full losses back to back. I'll be like, well, that sucks, but it is part of trading and it's going to happen every few years or every now and
Yeah.
then, right? So I think a big part of it is none of us want to be losers and nobody wants to take a loss. But you have to just accept it. And if a loss does a lot of damage, and that's why you're scared to take it, you're overpositioned, and you're trading outside your comfort
Mhm.
zone, right? So it really just comes down to having to accept that you're going to take losses, and losses aren't bad if you keep them
Yeah, I mean,
controlled.
listen, because
And
it could. That's what I'm saying. I think that's some of the issues that people have. They just like they fall in love with the stock, and you know what? Sometimes a divorce is better or sooner. I like to compare it to marriage because we know everyone gets married and there's been big divorces, and some people will tell you like, "Oh my God, I got raped." You know what I mean? So sometimes it's better cutting your loss sooner than later. Obviously trading's a little bit different, but
yeah.
like, we don't have any feelings. I think that's why we kind of teach our traders. And, and with that said, what is the biggest mistake that you see traders make? Now you've been doing this for 26 years and being a very big, very well known to be a guru in this industry. What are you seeing what is the biggest risk mistake that they make?
Yeah, well, their emotions get in
Right.
control, and they're either too scared. Like right now, their FOMO is pretty high. A lot of people missed out on this big rally after April, and people are like, the markets. They feel like they're going to top. They have these emotions, and unfortunately, they just don't get into trades positions. I mean, I'm looking more at swing traders versus day traders. They're just scared to get in, and that's their emotions are taking over. And then, of course, um, unfortunately, they either don't get into a trade because they're scared, or when they do get into a trade and it's working, and say we get into a trade and we're like, hey, we're hitting a profit target, we need to trim some off and move our stops up. People are like, they instantly have like fear of missing out. They're like, well, it's working. Why do we
Yeah.
want to sell it? I'm like, well, we have to reduce our risk because it's hitting key levels
Yeah.
here, right?
Yeah.
Like, let's take some money when the market gives it to us. And so if you do get them in the trade, they don't want to lock in gains because they're like, it's working. And then when it starts to lose, they don't want to get out because the typical, well, I'm going to wait for it to just come
I
back
hate
now.
when they
But
say that.
you never know which one is the one that doesn't
Yeah.
come
Yeah.
back. And it could be a bear market that lasts years. It could be a penny stock that had a 1 day pop. And then, I remember back with you when we were day trading live. I mean, remember there'd be these random little tickers that pop up and you'd call the broker and you'd be like, guys, I got us access. We can short this thing today. You get like special access. and we could actually short it. And then like 3 days later, you'd never see the stock
Yeah.
again ever. Like, and so I did learn, like, I don't care what the company name is or
Yeah.
what it is, just trade the price action and forget the rest, right? I don't fall in love with any stock. And I think I learned that through you initially, is like, just trade the price, trade where the opportunity is,
Well,
and
but
move
you know,
on.
I've been going to Canada for almost like 30 years, you know, and one thing I think Canadians, it always like it's like a sensitive spot for them is they all own Nortel, you know.
Right. Yeah.
Everybody owned Nortel, and they rode that thing all the way down to
Oh
like
man.
until it went to zero. And it was like a big celebration when
Yeah.
they finally closed. Everyone would go crazy. And like I said, that was one of the things. You can't take things personal. You know, you can't take things
Yeah.
politically
Yeah.
personal. You can't take things. Well, it's the company that I work out personal. It would literally take it just to you as a trader. I think, like you said, over the years, just learn it. I don't really care. I don't even know what I traded 10 minutes ago. And I really don't care what the company does. You know, I mean, I kind of do, but
Yeah.
it doesn't
Yeah.
really matter. I mean, like we trade a bunch of
Yeah.
stocks this morning. Did great, you know, but we're in cash and, you know, we do our swing trades and that's what you have to look at it. Listen, to survive in this business, you got to trade. You know what I mean? You can't sit there and watch it. Now how many times have would you say that you see traders, not take losses before, they got to have to kind of like, how could I say it? Like you see a trader trade, they get into a position, and when do you tell them when enough's enough? When to pull the trigger?
Yeah. Yeah, it's tough. I mean, it's kind of like herding sheep, and you lead the horse to the water, and they just won't drink, even though they're in the desert, right? Like this is the part I really struggle with, and that's what I'm always trying to educate people on, is like the mindset. I actually wrote an article on personality styles. You know, the Myers-Briggs personality test. You're like an
Yep.
INTJ or these different initials. So I wrote an article about it, and it was actually spurred. I'm kind of going off on a tangent, but it was spurred by this research report in the States saying that 81% of people are expected to go or to run out of money in retirement. And I was like, and I just finished doing this Myers-Briggs kind of article. And then I'm like, well, this is interesting. I'm like, I wonder, like, I looked at these 16 personalities, and like 13 of them are emotional. They're sensing or feeling, and those people become very emotional. They're like, oh, I feel like the market's going to top, or it doesn't feel like they have these feelings, which keep them out of trades. And so 81% of personality types, I found through my research, don't bode well for traders. So it was funny that those two stats came together. And so this is the big thing I struggle with is, I mean, as you know, you can lead people to a trade and say, this is a perfect setup. This looks great, blah, blah, blah. And like, this is where I'm getting in. You can, follow me, whatever. And that's what I do. I share the trades I do, and people just have to follow. And they don't get into the trades that
Yeah.
work out, big trends, because those are the ones
Like
that
a deer in
they're
the
the
headlights.
most scared. Yeah, exactly. They're usually the market conditions in a certain setup where their emotions are running high. They're like, I don't know, I don't trust this one. I feel bad. I just don't. I'm going to skip this one. And then we have like 15% rally in the market, and they're like, how did I miss it? And then they get into the next one as the market's topping or something, and it's choppy, and they're like, everyone I take is a loser, right? So it's people who like, it's just tough because you can give them something to follow and they don't
Yeah.
follow it, and it's because their emotions jump in the way. And
What do you
so
tell them? I mean, like, when's enough's enough? You tell them, so listen, this is for you or not. You got to be very honest with them. Listen,
yeah.
I'm old school Italian, first generation, live in New York. I'm old New Yorker. I just tell you the way it is. But like, listen, sometimes you can't be. Nobody, not everyone gets trophies. Okay, you don't get trophies for last place. You know what I'm saying? Like,
Yeah.
but there comes a
Mhm.
point when you blew up two accounts, and I think you said you blew accounts earlier. I blew up accounts earlier, and I think that was my biggest lesson to learn. Okay, I'm not doing that
Yeah.
style again. So when a trader comes to you, how did you find your style, and then find out when maybe this is not your style? You have to do something else. Like how long you think it should take them before they figure it out that works and what doesn't work?
Yeah, I mean, I used to buy stocks and do covered calls on them for a long time. It worked well going into the tech bubble. And then I lost my shirt through the tech bubble. And then I realized I got into technical analysis. I got into some Forex and like currency trading, started to get into the futures and things like that.
Did you like
And
futures? You still doing futures, or you still doing stock? What are you doing?
I day trade when there's a perfect kind of intraday setup. Usually I get a couple of them a
Okay.
week, or not a week, sorry, a couple of them a month. If I have a particular, usually it's on one of the biggest rally days or one of the biggest sell-off days. I have like a couple little sweet setups I trade into the closing bell just for a quick in and out. I'm in usually a half an hour, 20 minutes, 10
Okay.
minutes, who knows, just to play some futures. So I that's where I get my little fix every now and then. But where was I going with that? Sorry, what was the question
No, so
again?
like when's enough's enough? Like if something doesn't work for you, that market, I
Oh
get
yeah,
people like
yeah,
all the time, like they're fixed on options, and I'm like, how long you been doing it for? Oh, about 2 years, and then
yeah,
like, and you're working for free. You better work at McDonald's. You make more money doing there if you haven't got
yeah,
it. So when do they find? I mean,
yeah,
like, listen, it's a great trading is a business. It's so many types of business. Like in construction, you could do housing, you could build houses, you could do plumbing, you could do electrical, just like trading,
yeah,
there's options, futures, forex, day trading. But when do you
yeah.
think that enough's enough for them? You tell them that you got to move on and do something else.
Yeah, it's tough to say. I mean, generally, if it starts to feel like work, like to me, day trading started to feel like work. I had other things. I started a health product company, and I had dealers around the world, and I had my hands in multiple things, and so day trading starts to like, you know, started to eat into the time of other stuff I wanted to do. I didn't want to have to hunt for trades, and I didn't want to follow them every day and stuff like that. So I was like, I want to step back because I have my hands in other things that I have a passion for and that I'm kind of bringing to life. So for me, when trading or that strategy, I was like, it just doesn't really work with my style and my lifestyle. Really, is the point of it. I just kind of rotated to something different. So I started to just move back to swing trading, and then I kind of got more of the strategy I do now is more
Okay.
position trading. We're in trades. It could last a week or two,
Explain the
but
difference
a
because I
lot of
think some
them
people don't
last.
know the difference between a day trade, a swing trade, and an investment trade. What is your
Right. So like the way I see it, I would say from the shortest trades, the quickest trades to the longer would be kind of like scalping, day trading, swing trading, position trading, and then like long-term investments. So swing trading, you're holding for a few days, a few weeks. It might drag out to a couple months. The strategy I'm looking for, they're usually multiple weeks, and some of the trades will carry over for 3, 4, or 5 months. So I wanted to step back to some longer term moves that happen in the market. And the way I like to look at the market, I like to explain it, Fausto, is like I look at the stock market like the ocean. I like to surf. I live on the water. And when the tide goes up, what happens to all boats? They all go up. Well, the stock market's pretty much the same as you know. If it's going up, you want to be long stocks that day. If the market's going down, you should be looking for shorts. And so knowing if the tide is going up or down, I then kind of zoom in a little bit closer. Think of like a surfer floating out past the waves breaking on a Florida beach. What are they floating out there waiting for? They're waiting for that set of waves that roll through. Well, the stock market has like 5 to 12 waves between stocks, bonds, and the currencies that I follow. There's about 5 to 12 waves that are clear. You see them coming, they have momentum, and those are the ones I look for. And so the nice thing about hopping on a strong wave, catching an ETF, is it lasts usually several weeks or several months. And you also know when it's starting to get weak because it was stronger than most other waves. So I'm not looking for daily ripples and chop in
right?
the water in the markets. I'm like, no, I'm catching the swell. I'm going to surf this thing and I'll start trimming off as we go. So that's the way I see the market. And so that's where I've navigated to. So now I have like 5 to 12 trades a year. That's it. And then it gives me time to do other stuff that I want to do on the side. So it depends on where you are in the stock market cycles. Like a lot of people will jump strategies depending on the market's like stage, right? Like a bullish environment, you kind of use one strategy more aggressive. A choppy market environment or a bear market, your trading strategies have to change quite a bit. It's very different trading a bull and a bear market in terms of how you navigate the trades, how quickly the trades unfold. So a lot of people, I think, they try a strategy and it's in one market environment and then they fall in love with it and then the market environment changes and then they lose money. And they're like, oh, I did so well and I gave it all back. People don't realize you do need to change your risk, your strategy to some regard. Maybe not so much for day trading because it's a fresh, clean reset every day. But yeah, I think people a lot of times don't realize you need to have multiple strategies and ways to navigate different market environments and volatility levels.
So with that, where do you? I mean, so do you trade any? Because I trade a lot. You trade a lot of ETFs. You said. Okay. Do you,
Yeah.
do you trade any of the high yields ETFs too? You ever get into those at all?
No, no, I don't get into the high yield
Okay, so you
ETFs.
just deal more with them. Now, so where do you see the market now? With everything that you're using as your indicators and everything else on the long term, as with the market, because like I mean, granted, what we're doing today, the summer's really ugly. It's not really much more going on, but like the Dow is basically it just broke all-time highs, from Friday and stuff.
Mhm.
S&P is like literally hovering right there. Where do you see? Are you see it continue to go higher? Are you worried about what's going on with politics and stuff like that? Or, what do you see? What do you see?
Yeah. Yeah, I have an infographic that shows a lot of this, but there's a few big cycles at play, and so I think we're in, when it comes to a business and economic cycle, I think we're in kind of a topping phase. We're in this what is called like innovation and adaptation. So the market is we have AI. It's the new innovation. It's getting applied everywhere. It's spurred on all kinds of business, and it just happens to be the big tech companies that are the largest that drag the indices up. I don't think the economy and the stock market is super strong, but there's no doubt the innovation in the tech, which are the mega giants, which can drag these indices higher, are making everybody think everything is really bullish. I think we've got a pretty bearish picture around the corner. I think there's going to be a big reset. I wouldn't bet on it yet. I'd wait for the trend to actually turn and for things to go
What makes
south.
you think
But
that?
well, I mean, gold is a really good barometer. I mean, it's a pretty basic tool, but man, it has been outperforming. It has got a very bullish chart pattern. It is pointing to global fear. People are really worried that usually when gold is kind of where it's at and performing the way it's done, it's very similar to 2007. Just before the S&P 500 put in an all-time high, gold was a top performer. The US dollar was the worst, most hated currency at that point. It's the same scenario now. Gold was a top performer percentage-wise, and we could see gold really pop and rally 20 to
Still
35%
think
or
it go high
so.
because I own
Well, the
gold. I mean,
stock,
I know a lot of my traders own gold too. You think it still goes higher from here?
I think it's going to go about
Wow.
20%, if not maybe about
I was like this close to
35%. I mean, it
selling it
has
too. I'm
all,
like, you want to laugh? When I was in Toronto for the expo, not to change the subject, but like, I'll never forget you had the Canadian Mint there, and they had a gold
mm,
bar. I have a picture of it that they held. I don't know if you were there for that, but they had a solid gold bar, and I think gold at that time was trading at like $900. So I was holding
okay.
$900,000 in my hand. You had two
Yeah.
military guys next to me, like taking a funny picture with me and stuff like that. And
Yeah.
that is when I bought a lot of my gold. I bought it then. I actually bought a lot of silver, Canadian silver too. The coins there, they were cheap then. It
Mhm.
was like almost like $7, $8. And now you bring it up, and I'm thinking like, I got a nice little profit, and maybe I should sell it now because it took off. Because I was making shit on that. I mean, I think it was going
Yeah.
anywhere for a
It,
long
it
time.
costs to hold that stuff.
It
I
does.
Yeah, I mean, for sure. I mean, I've got a lot of physical gold and silver. I love it, but I do think there's going to be a time. I think gold could have one big pop. I mean, there's a comparison chart. If you pull up 2007 and now at the S&P 500, we have very similar. The markets are pushing to all-time highs. Gold has had a big rally. The same setup happened for gold in 2007. It looks like it's ready to. It was supposed to rally from a technical standpoint in 2007 about 20%. It ended up going 37%. Anyways, we have a very similar scenario. The gold to me is one of those things that's just saying there's something wrong globally. Everybody's getting nervous. There's a bunch of other stuff. I mean, in my whole kind of calculations, I use a lot of intermarket analysis. Money flows between various sectors and currencies. I use cycles. I bring a lot into play to see where we stand in a lot of this stuff and where the money is flowing and how strong it is. That's how I can gauge if it's a swell coming that's worth riding. Is I have a lot of different. I want to know what the money flow is doing, the sentiment of the big players, and so that's what I follow to see. Like when the trend starts up, I can look under the hood and be like, holy, that thing's got some horsepower. There's a lot of money flowing and from all the right places towards it. And so that's when we jump on board and catch these waves. But yeah, I mean, gold is one of those barometers saying we're topping. I think we're in this innovation stage. I think the markets have been juiced really high. And really they're just getting dragged up by the big techs. And I mean, you don't want to bet against it. This market could just keep going higher and higher. I mean, but you have to have a game plan for when and if. It's just a matter of time before we do have a correction. Who knows when? But you need to have a game plan to identify it. And most people don't, right? They'll just hold on and they'll ride it down like Nortel or all those
Well, hopefully they
other.
don't have enough Nortel. That didn't work out too well, But like, listen, like you just said earlier, in April, we had the liberation crash, I call it, and that was just a great opportunity.
Mhm.
Like people don't understand. I tell Chris that, and you remember this even teaching. I tell it's healthy for the market to go down
Yeah.
because to go down, it's the only way it's going to go back up. You know what I mean? You got to scare out all the fear.
Yeah.
See what it's gonna eventually things gonna hit bottom. If it was the housing crisis or whatever. If you look at where the housing crisis was and where it is today, it's like, oh my God. I mean, if you only had the money to buy back then, there's going to be opportunities. A lot of people did miss that rally. So
Yep.
you want that correction to come in. People are going to take profits, and traders ain't stupid. I mean, like
Yep.
all these brokerage firms, you probably learned that over the years. But the question I had to ask you is like, but do you follow crypto at all with it too? Do you see any? Because we're getting a little correction in crypto right now. We did drop down about 10,000, from the highs of 120,000. Do you see that there being? Because I know a lot of mutual funds. I still live here in New York. I was just out just recently with a lot of hedge fund guys, and they said the same thing you said, that they're expecting something like in September. I don't know what you're seeing at that time, but what have you seen, when you think it crashes, and do you relay anything to the crypto market?
Yeah, I hate to put a time frame on it because the market's always drag and kick the can down the road, and the market, it'll wait you out. It'll wait till you give up on your idea. But I do think this fall, I think we're coming into that time seasonality wise where stocks are about to roll over. We usually sell off into October or see some weakness. If it was to kind of rhyme like it did in 2007, over the next 2 months, we see the stock market top out and start to go down. Gold becomes the defensive play. We see gold rally to 4,100, 4,500. We see
Oh my
silver
God,
spike up to $50 an ounce. I mean,
what about silver? You think silver will rally with it, or just gold? Because silver really didn't rally that much.
no, I know, but it's a late bloomer and it just pops and spikes, right? I think it has potential to spike to $50 an ounce. It'll be short lived. I think this pop in precious metals will be like an opportunity to potentially lighten your load if you have some, and wait for, if the markets do correct, we're probably going to see precious metals get hit. When the tide goes down, when the whole world is fearful and they're selling everything, even good and solid investments, pardon the pun, like precious metals will get sold off for forced liquidation and just fear. People sell the right things, they're just out of fear. They'll sell off stuff. So I think we're very close. I think we're going to see some weakness near term in the next 2 months, and it could be a rough end to this year. But the way the markets go and what the Fed does and all that stuff, I mean, they could just keep kicking the can down the road. Nvidia, and Tesla have got some strong chart patterns. If they kick into high gear, they're going to drag everything up. So you don't want to bet against this market. You just have to follow the trends, and that's the big difference. Is like, I don't try to pick tops or bottoms. I literally just identify a trend. I let it start, and then I gauge it. I'm like, is this a wave? Is this a real trend with power? If it is, I hop on. I never get in at a bottom. Very different than day trading. I don't buy like at support and sell at resistance. I identify it's more of a trend trading. I'm trying to catch a swell through an asset class. Money just moving into equities or moving into bonds or moving in or out of the dollar, whatever it is. I go for those waves, right? So that's the way I see things.
Now, regarding about, I know you being a technical guy, just really quick, what made you, what are you a fan of and not a fan of? Because we have to listen to thousands of indicators out there. Because how did you figure out which is the right ones that work depending on certain styles? Because I try to tell everybody, the way I teach is I teach something called the right of the chart. I'm just following order flow, but obviously being a swing trader, you're following that. So what do you recommend to the listeners? What indicators should they use on certain styles, and which ones that you use for your style? Because some are better than others.
Yeah, I mean, when it comes to kind of position trading, I use more so some moving averages. I have like a pretty detailed sentiment breadth of multiple indicators that actually, when they confirm, they say, okay, the market is strong. Now we just need to wait for the daily chart to get into an uptrend and show it has some strength. But I mean, for a short-term, more active trader, somebody who's day trading, who wants to trade morning gaps and things like that, and really just like the 30-minute chart, I found the perfect setup on the 30-minute chart. I pretty much just overlay the 5-day moving average broken down into 30-minute increments and the 20-day. And more or less, if the 5-day moving average is above the 20-day and price is above it, you're in a nice uptrend. You're looking for longs, buying oversold dips. I have a simple indicator. I actually have it in my book, Technical Trading Mastery, exactly how to chart out the 30-minute. And it tells you where the market's overbought, oversold, more so using stochastics. It also tells you how to identify the trend, if you should be buying the dips or selling the rips, like if you're in a downtrend for that day. And I also show how to identify short-term FOMO, so fear buying, panic buying, and also panic selling. And it has amazing ways to have multiple trades every week. And then on top of it, how to trade gaps. And so I like the 30-minute chart and just identifying.
No MACDs, no VWAPs, no
RSIs,
or.
No, I don't get into that. I'm really just catching kind of momentum moves that have. The thing is with the 30-minute chart, and really I take a daily chart and I break it down into 30-minute I bring the indicators over to the 30 minutes. So I'm not looking at intraday patterns. They're actually they're multiple day. It's usually like a 2 or 3 day pattern that plays out. And so it blurs the lines. It's not really day trading because it's actually going to last a few days. So it's bigger than the intraday day trading kind of pops and drops and patterns and stuff. So I find it's a really cool sweet spot. And that's what a lot of people do. I do a morning video every day and we talk about, get ready for this gap open, either higher or lower in the fade, and if we should, trust it or not, and these price levels and all that stuff. If there's panic, I always tell people, I'm like, when I see panic on these indicators, I can tell. I'm like, guys, you're probably feeling nervous. This gap down is scaring you, or this gap up is giving you FOMO. Don't freak out. Like, this is what we want. This is an opportunity for us to take advantage of. So I do narrow right down, and I pretty much hold people's hands on a daily basis before the opening bell, because I have a lot of active traders who day trade and take advantage of that analysis. But my core portfolio trades, are the bigger picture. But I need to hold hands during these whipsaw days because investors get nervous like that. One piece of news and they're like, should we abandon ship and get rid of or close all positions? I'm like, this is just a piece of news, guys. It's a one-day blip. Like, chill.
Well, by the way, we're going to post up a QR code. So if you want to be able to register and see Chris about his, and get his newsletter and also see him live in the morning, just take your phone, scan that QR code. We'll post up the link up there also. That we have your website that people can find you, Chris, there. And by the way, listen, which is great. Chris is going to be there with me in Toronto. So if we have any Canadians out there, listen, if you're in the area, come out and see us in person. We love to see you. We love to talk to you. It's one of the best times to kind of meet us all there. Especially you kill two birds with one stone. So that's, it's news to me that you told me that. This is fabulous that you're going to be there again. So, and I love doing that event. I love coming to Canada. I love the people of Canada. I feel like
the money show's a lot of fun. It's great.
Yeah, it's a lot of fun. I'll be doing a live Traders Challenge on Friday. When you're going to be speaking when you're going to be doing Saturday. So yeah, Saturday's a pretty big day too there. So I'll be running around there Saturday too. Yeah. Chris, before we go, any last minute advice you can give the traders, for a newbie or, that's just looking to get into it and, how should it get started? Let's say if I had $10,000 to start, what should I do with it? How should I get involved?
Yeah, I think the way I would go about it would be to focus on technical analysis, reading charts. I would probably zero in on an intraday chart to get some time, get some lap time, get some chart time in. I think it's important to go through and live a lot of scenarios. I would probably paper trade for a little while, although it's nothing like trading real money. But it does at least kind of get the wheels turning. The best that really it is. I always tell this to everybody. I'm like, if you want to get some experience in, you forget the news, forget fundamentals, all of that stuff. Who cares about economic data or tariff crap? Just focus on the charts, follow the money flow, and get in your repetitions. And day trading charts is the way to do it. And then from there, once you've nailed down how to navigate, charts and understand you got to trade with the underlying trend. If the trend is up for the day, don't be looking to short stuff. Just, always have the tide in your favor. And then from there, once you've mastered it, you can stretch out to daily charts or 30-minute charts or weekly charts, however, whatever suits your style of investing. And I think that's kind of the key, and accept to take losses and consider your first trading account your tuition. And you got to trade real money to truly learn to trade. And through that, you're probably losing.
That's a mistake people make. I see people that are still on demo mode for months and years. I'm like, what are you doing? You know what I mean? Trade one stupid share.
Yeah, put in the 10 grand and pretend it really is. It's a $10,000 course. You're probably going to lose it because it takes a while to lose it, and it's easy to lose it. It only takes a couple really bad trades. If you have no idea what you're doing, it can be gone. So yeah, just learn to take losses, learn to keep them small. We got to find a mentor who does the style of trading you want, right? And
that's another thing. That's a great point. You brought that up. I was just going to say that. And also make sure that some of that money has to go towards your education. You got to learn from some other people. I mean, and try a little bit of everyone's stuff. Try to see what fits your style. Like you said, we're going to be at the Money Show. There's going to be multiple people there. I'm also going to be in Orlando too. And now with these webinars, everyone right now, listen to a couple of people, try a little bit of their stuff. Try Chris, try mine. You know what I mean, and see if it fits. And listen to some of those videos and just and listen. There's some bad actors out there. We all know. You know what I mean, and there's some influencers and they're gurus. So definitely. make sure you make an investment. Anybody that you would any good books that you would last minute recommend too? Because I know you're a bit you read a bunch of books at your side that some people should go out there and read.
Yeah, there's a couple. I mean, I think one of them was Stan Weinstein, How to Profit from Bull and Bear Markets. I learned all about the 4 stages of the markets. And I've carried that over. I've written 2 books since then. I think the style, like I do completely opposite of what you do, Fausto. I'm like least amount of time behind a screen possible, larger term patterns. And I wrote a book called Asset Revesting, and it's all about just holding assets that are rising in value and moving to a different asset class or exiting everything when nothing is in a strong enough trend and a wave. So more or less, I focus on protecting large accounts, protecting retirements, lifestyles for more so 50 plus individuals who don't want to learn to trade, who want it kind of done for them to some regard. They just want a strategy that actually manages risk, and they don't have to worry about the tariffs. They don't have to worry about a bear market. That's what I focus on. But understanding, like Stan Weinstein's, the 4 stages, it happens on the 1-minute chart, on the tick chart. Understanding the stages, every stage requires a different strategy or an alteration, a tweak of your strategy. And so people just need to know that. They need to identify which way the broad market is going and then make sure they're trading with it and go from there.
All right. Well said. Well, thanks, Chris, for coming here. And I look forward to seeing you in another couple of weeks. And everyone, I just posted a link up there for the technical traders. So please go out there, subscribe to his channel. Make sure you like us, friend us, share us. We'll make a couple of quick little highlight shorts of today's event. We'll have that all up to you if you subscribe to our YouTube channel, and we'll get those so you can watch them. And we'll have this posted on our podcast. And Chris, listen, thanks for being here. It's so great to see you again. And I'm just so happy where you are today, from where you started being a student, and now you're here as a great entrepreneur. You've been a great contribution to the trading community. And thanks again. And thanks everyone for being here.
Yeah, appreciate it. Pleasure.
All right, everyone. Thanks for listening, and we'll see you back next week for another episode of Cyber Traders.